to the Stock Market Morning Prep video for Tuesday, April 22nd. We got some follow through from last week. Dow Jones up 40, Nasdaq up 26, S&P up 7, and the Russell up 4. So yesterday we did get a green day, but that came with another reversal. First thing in the morning, we gapped up and then we sold off right around 10 o'clock into the lows, making new intraday lows, and then recovered from there and kind of rallied. And that's really been the theme for the last several weeks, having these reversals. And what happens is when the market reverses like that, the market indexes, a lot of stocks don't recover. They just kind of bounce and then they kind of stay in a range pretty much most of the day. So doing damage to the portfolio that you guys are trading. So you got to realize that. Sometimes it's better just to take a step back, you know. And I like to really see which way this market is headed. Now, we do have that holiday reversal that we mentioned last week. That came to fruition, and now today is Tuesday. Easter Monday is behind us now from Europe. So now we have everybody back to work. Let's see what happens here if the markets now revert back to the downside, or if we start to challenge highs and make new highs again. I mean, it's anybody's guess with this crazy market. It is absolutely insane the way the markets are actually trading. Especially, I haven't seen reversals, intraday reversals like this for quite some time. And that means that the markets are ready to vacate the premises, if you know what I mean. That we're starting to literally move down to some extreme levels that I haven't seen. And I mean, I don't mean levels, I mean markets that where we're rallying and then we just revert back to the downside for no apparent reason and then rally right back up again. To me, that's extreme, and that's something that you need to reduce your share size, reduce exposure, trade lightly until this market can get back to normal again. So today's only going to be indexes, and I want to show it to you because it's most important with the intraday stuff. Pretty much most of the indicators are not really telling us too much. The McClellan oscillator is still back around 20, so it could go either way. I'm not going to bore you with the details. So let's get right into it. We have the bonds here, the ZB. We did break out, and as you can see, we kind of failed again. Still holding a 20, and I think it's still constructive here. And you can't take notice that you have to really watch this because if we start to break back out and take this little area out, then I think that you're going to have some blue skies above here because there's nothing really up until somewhere up in this area here, which I would set the retracements up for. But again, you could see that we're holding true. Yeah, this is a bearish candle, and this does obviously, if bonds start to pick up, obviously money will be coming out of equity. So we need to keep an eye on this. So right now, not telling us much. We're just kind of chopping around in here. Take a look at the yen. Same thing with the yen. We have this ascending triangle. We're back in it again. A lot of overhead resistance, right? We have the trend line, we have the cluster, and we have the 200-day on the daily chart. So, but we're still forming this bullish wedge, if you will, right here. So if it breaks down, then obviously it'll test this low. But if it starts to break back up again, we're coming into the apex of this triangle. So anything could happen here. So we need to wait. Right? We don't want to be positioning ourselves for something that we don't really know, or at least have a good handle on which way the markets want to go. Obviously, market's been up 5 days. It is due for a rest, but as you know, with this extreme market, we can rally another 5 days. So that's why it's best to just take a little breather and see which way some of these asset classes are telling us which way this thing wants to go. So the yen itself, obviously, we get a pop in the yen, we get a sell-off in equities. Okay. Now, if you're looking at the dollar yen, it's obviously correlated with the S&P. All right. So let's take a look at transports. Now, here is the only thing, and I mentioned over the weekend I put out a video. Here is the only factor where I think where the markets can go higher is our leadership is playing the leadership role right now, and that's going to be the transports. We have an ascending triangle, right, and we've been up 4 days in a row, acting really good. We did get a little bit more volume than yesterday, previous day, which is nice to see. All right, breaking that 50-day moving average on volume. So we did have that. So that's pretty good buying here. Now, the transports are the leaders of the four indices, of the five total in five that we follow. But remember, now we're up 5 days. We're coming into challenging the highs. Could we double top and roll over? That's the canary in the coal mine. That's something that we don't know. So that's something that we need to really watch today and tomorrow to see what happens here. Okay. Now let's take a look at IWM. Now this is our secondary lead, a good gauge of risk. What's happening here, though? Really not much of anything. We're below the 20, we're below the 50, we're below the 34. And what's happening here is that we are making bear flag patterns, as you can see. So this is not telling me anything great. We're below major resistance here. So, this is where it gets tricky now, because we're at a sweet spot where the market should roll over. Okay, now, does the market roll over? Do we start rallying again for another, month and a half straight up like we did here? Who knows? That could absolutely happen. So this is something to me that we need to pay attention to and not just get in front of a freight train looking to short the market. Okay, here's the Q, same thing. Right, with pattern recognition, we have a downtrend, we have bear flag patterns, and that's exactly what this is doing as well, just underneath the 20-day moving average. And look at volume. Volume has decreased ever since this move has happened. So the volume has not confirmed price action, so that tells me, and we're making a lower low with lower highs in place, so this does not tell me anything bullish. Okay, so that's why I'm thinking that we do see lower prices. Now let's take a look at the ES. Same thing with the ES. We're actually we rallied. Look at the volume. Volume was anemic. Look at this. We dropped ever since we rallied here. We've dropped. Now that does not mean that we can't go higher in this crazy market, but we have to look at all of the warning signs and say, look, you know what? I'm not going to get so overly bullish at these levels, especially now we're still at the 1272 extension, which capped this market all of 2014. Okay, so let's see and be aware where we are. Now, this here is the sweet spot. Now, here's the hourly chart, last chart I'm going to show you. We are in this band of resistance here. As you can see, right up in here, we're above the 61.8% retracement, but we're below the 78.6. And this really here is the sweet spot. So this is where I would like to see this thing price stay below it, but we're not too far away. And look at the volume, how it's just dried up. So I'd like to see is we're going to really need to get below this 50 right here. It's going to be 1859. We need to get below that in order for price to alleviate this upside pressure. Okay, now if we take this out, then you're going to have that 1272 extension. Okay. So that's going to be what I'm watching for today in the ES is 1859 on the break lower, and then maybe a back test to confirm, and then we should be headed lower, at least challenging the lows from 1803 here, okay? So let's keep an eye on it today. Today, maybe still slow. People still getting back in Europe, back to work. Futures are basically flat, so very, very quiet. And we'll see what happens. Maybe Apple and you get Netflix, they jumpstart the Qs, and then all of a sudden we have a big tech rally, and markets actually follow suit. So we'll see, and let's be prepared. Let's be prepared for the unexpected, okay? Have a great day, everybody. We'll speak to you tomorrow. Take care.